Well. Here we are on Tuesday, December 9. It is 2:30 p.m. Eastern. And if you guys haven't noticed, I'm wearing a little bit of hat here. I'm in a little bit of a Christmas spirit. Very excited for Christmas coming up. My family and I, we celebrate it every single year, of course, and so does America with all the gift buying. Happy holidays. Let's give a lot of love to the other holidays that are occurring as well. Didn't mean to rag on anyone as far as Christmas. Christmas obviously is not the only holiday. We have many other holidays coming up this year, but it is a great time of year. Like, you could feel the love. Everyone's smiling. Everyone's happy. People are buying presents for Mary Joseph and Mary Jane and Santa Claus, all this crazy stuff. Happy holidays, everyone. We are going to wrap up this year. Now, if there's one gift the market can give to everyone, that is a Santa Claus rally. But Christmas does come early for some people out there. And those people out there are the shareholders of BMN. What is going on here? Hold on a second. I apologize. I can't even get this chart right here. Good gravy. I mean, you guys are definitely feeling the love over here at BMNR, but this thing is just on a monster rally today, up over 10%. Whew. Man, I wish I did not close my BMNR swing last Friday, because I would be milking it right now, but can't complain. We cannot complain still. Congratulations to all the shareholders out there. Appreciate you joining, sir. Happy holidays to you. Let us round things up real quick. All right, so we got a great show. What's going on, June? Welcome. I am actually streaming on my YouTube channel as well. But just to showcase everyone, I'm going to be streaming this show exclusively on the Wolf YouTube Financial. I apologize for not streaming it on my channel recently, but just to let you guys know, head over to the Wolf Financial YouTube page to subscribe, because that's where I will be streaming this entire series. And very excited. This is day 3 of this series, and we are going to be hitting you guys 4 days a week, Monday through Thursday, very likely. Going to be rolling on the streams out there. There is so much to talk about today, but we do have to narrow it down to 4 specific topics. All right. First thing we're going to cover, of course, is the news that we received yesterday from NVIDIA getting the green light to sell the H200 chips to China. Now, NVIDIA is already estimated to come in next quarter with 60% plus growth for their data center segment, as well as their top line. The question is, this chip sale, which will not be accounted for this quarter, obviously, but will it provide ample upside for NVIDIA to cross that 200 line that we've been seeing? I mean, we have had a monster resistance over here on the 200 level for NVIDIA. Let's actually take a look at the NVIDIA chart here today. I mean, I really don't know what to make of this. It's been really sideways if you go all the way back to June. We had this monster rally. And one thing that you can see with NVIDIA is that it loves to make these monster moves to the upside and just chop around until it makes another leg. Could this be a setup to go above the $200 barrier? I know that this is definitely one of those stocks that obviously Wall Street is very bullish on, with very high estimates. In fact, we had a recent price target raise to $320 for NVIDIA, which would put it around like $8 trillion valuation, which is pretty wild to think about. Of course, these estimates are usually a year out. So we could have, obviously it's not going to go in a straight line up if it does. But I would say that even trading on a cheap forward multiple, as far as price to earnings on a forward basis for this stock, considering that they're going to be reaccelerating growth past 60%, and that's not including any additional China sales that they will be having if they continue to sell chips to China, which is the H200 chips, not the H20 chips, the H200 chips. I mean, I think they could reaccelerate pretty meaningfully. I mean, if they do reaccelerate in the 80% range, which is pretty wild to think about at a $325 billion run rate, That would be pretty wild. I mean, law of large numbers, still a $320 billion run rate company growing at 60% is just insane to think about, considering a company at this magnitude. NVIDIA will lead the way for a Santa Claus. I sure hope so. I sure hope so, because we need the whole market to go up for that Santa Claus rally. We, of course, have the FOMC event coming tomorrow, and there is a very good likelihood, in fact, specifically an 86% chance of getting a rate cut tomorrow. So going back to NVIDIA, I did want to touch on a few things here. So what is the case for NVIDIA? What is the bull case for NVIDIA? Obviously, it is the chips that they sell, but more importantly, it's the ecosystem that they have for the chips to sell. But on top of that, you also have cloud growth really expanding across the board for all the major hyperscalers, and this includes Alibaba. Right. So Alibaba CEO Eddie Wu came out and said that Alibaba cloud server is seriously lagging behind the growth rate of customer orders, meaning that there's much more demand than the supply that's out there. And in order to meet that demand for cloud growth, you saw AWS coming at a monster 20% growth, largest hyperscale in the entire world. Andy Jassy, CEO, Matt Gartner, CEO of AWS, continues to pound the table saying, look, we don't have enough compute to meet the demand. If Alibaba needs these chips, they very likely, and in my opinion, I think they need the NVIDIA chips. I think they especially could use these H200 chips. There is no concrete evidence out there saying that NVIDIA is somehow getting their hands on the Blackwell chips and the future Rubin chips through the black market as well. But we do know that they need to train these models that are out there. You obviously have that additional compute or that silicon that Alibaba does produce in-house as far as their ASIC chips. In addition, you have Huawei producing their own chips, but none of these are really comparable as far as clock speed comparison goes to the NVIDIA chips. And if they are able to get their hands on the H200s, not the H20 chips, the underclock chips, but the H200 chips, which is the previous generation that's out right now. Right now, we have Blackwell. H200 is the previous generation, the Hopper series. That will put them a little bit more head and competitive against the US for artificial general intelligence. But I mean, I live in the US. I'm going to be pro US. In fact, we're all investing most likely in the US stock markets. I think the US is going to win this race. The question is, what is China willing to do to be competitive in that race? I think they need these chips. So we're going to continue to look into more data to see the backing up of that thesis, how NVIDIA does need these, how China does need these H200 chips. You had the news come out this morning basically saying that China was saying that, oh, well, we're going to start putting limit access restrictions, or we're going to start putting restrictions on who can actually access these H200 chips. And you saw basically NVIDIA, it was up like $190 after hours yesterday, right? Let's look at these. Let's look at the after hours charts. Yeah, NVIDIA was up in the 190s yesterday, and then it just sold off into the early morning when you got that news from China basically saying that they, quote unquote, don't want these chips. I don't know. In my opinion, I don't think the thesis lies heavily on whether China wants these chips. I think it's going to contribute to its top line revenue growth if they are actually able to sell these chips to China, with the US getting 25%. So there is incentive not only from NVIDIA to sell chips to China, but there's also incentive from the US government. So you better believe that Trump is not going to sit down aside and wait for China to agree to it. He's going to be pushing every single button, pulling every single lever to sell those chips to China, because that means 25% income coming into the US, which is a very high margin for them because they don't need to pay for anything, right? So I think there's incentive from both sides to get these chips over there. Yeah, so NVIDIA attaching iTag to their chips. I mean, they could attach whatever they want to them. It's still the best chips in the entire world. What's going on, Bobby boy? How are you doing, sir? We have 13 people tuned into the Wolf Financial YouTube page. We have 29 people on my page. Again, guys, going to be exclusively streaming this over on the Wolf YouTube page. Go ahead and subscribe there. Going to do it concurrently throughout the rest of the year. We'll see how it goes. But of course, continuing to bring you guys amazing content. The last thing I want to do before I close on this topic is bring up an interview with Daniel Ives, or Dan Ives, very famous online. Second, am I sharing the sound? Let me share this again. All right, we got this interview that he had this morning over here. Let us roll with it as soon as I find it. Where is it? Here we go. Here we go. Apologies. I think I'm sharing the wrong screen here. Here we go.
I think Dan Ives joins us in person in studio, a global head of tech research at Wedbush Securities, and Arjun is also going to join for the conversation. Dan, fantastic to see you in the flesh. Thank you for stopping in. Yeah. Well, let me kick off with a broad brush question as we head into 2026. I think many would describe you as a perma bull on the tech sector in the U.S. Anything change heading into 2026? Or still pretty bullish on the space?
Look, the reality is it's still 10:30 p.m. that AI party that goes to 4 a.m. Because look, in my view, when you look at this AI revolution, it's now going to the second, third, fourth derivatives. It's software, cybersecurity, infrastructure, power. And look, I think the bears, they're just going to continue to watch this party from the outside looking through the windows.
Is it the hyperscalers that are going to continue to lead the AI trade, or are we going to see more diversification into other layers in 2026?
Yeah, look, it all starts with Godfather of AI, Jensen, NVIDIA, and now getting back into China. That's just another pop the champagne moment for them. But then you look at hyperscalers, you look at Microsoft, you look at everything that happened in Alphabet and Google. I mean, that's really been a massive turnaround story, right? I mean, I'd say the cab driver here in London was bearish on Google going into in the beginning of the year. Now, I mean, you're seeing it because, and I think you're just starting to see that in Amazon as well. But look, it's now going to spread use cases. That's why Messier AI, Palantir, in terms of what we're seeing there, MongoDB, Snowflake. I think that's going to be the trend here as the derivative beneficiaries of AI spread.
Dan, given that thesis on the derivatives, how much longer do you think this tech bull run has to go?
2 more years.
2 more years.
I mean, and I think that's conservative.
Yeah.
I believe we're going to be talking about NASDAQ 25,000, 30,000 over the next, 12, 18, 24 months. Look, this is a fourth industrial revolution. And there's someone like myself that covered tech stock in the late 90s. You'll hear all the comparisons. It's apples to oranges. We're talking about humanoid robotics, autonomous. The consumer AI revolution hasn't even started. That's going to go through Cupertino. I think that's why you're seeing Apple make those major.
All right, let's not get too excited, Mr. Dan Ives. We're going to be talking about NVIDIA right now. I do think that there is no such thing as a bull market without Apple making new all-time highs, which let's actually take a look at where Apple is trading today. Here we go. Apple is, it's like right around its all-time highs. Actually, no. It's like 3% off its all-time highs. I mean, not a really big deal. If you look at a lot of these mega cap charts, you have NVIDIA near its all-time highs. You have Tesla near its all-time highs. You have Apple near its all-time highs. You have Google, of course, near its all-time highs. The one thing that I'm always like wondering, like, dude, what is with Amazon? Like, I don't get it. I mean, bears can say this is a head and shoulders pattern, but then you would have failed over here and whatever. But I mean, I don't know what's going on at Amazon. Maybe it has a little bit to do with the consumer. Of course, I'm bullish Amazon. Amazon is, man, like 15, 20% of my portfolio. I haven't really calculated recently, but I've been long Amazon for quite some time, continuing to stay long Amazon. They actually just did announce this morning that final leg delivery, or final, what do they call it, last mile delivery for drone delivery, is actually continuing to testing phases, and they're going to be planning on launching that soon next year. I mean, that would be cool. I don't think that really is the moat when it comes to Amazon. I think Amazon is one of the best robotics plays out there. But going back a little bit, what do you think is powering all these drones? What do you think is powering all this compute? What do you think is powering basically everything and all the engines of the entire world? It's going to be compute. And it's going to be mostly focused on AI, which is mostly focused on chips, right? GPUs, graphical processing units. And a lot of this power really comes from general compute, which NVIDIA provides, but also the ASICs, or application-specific integration circuits, that Trainium and Inferentia produces from AWS. You also have Google TPUs. You also have Broadcom reporting on Thursday after hours, who helps design those TPUs as well. But you also have that network segment that NVIDIA is a part of with the NVLinks that connects everything together. You also have Broadcom with their network segments as well. Like, it's very hard to think that this tech bull run is coming to an end. And I think there was a little bit of a scare a couple weeks back, and we certainly have bounced pretty considerably since then. I mean, the NASDAQ is very close to its all-time highs. you know, we're having a little bit of trouble here, but we did technically make a higher high. The question is, if I look at these, and this is for the short term, guys, this is not going to matter if you're a long term investor, but I like to look at the short term charts only because it provides with the ample entries towards certain trades that I want to be a part of. And I wouldn't be surprised if we come over here and we retest the Qs back at 612, which is just 2% down from here. If you look at SPY, you have SPY at 675. That's 1% down. Like, this is obviously nothing. 1% down from here is just nothing for the long-term portfolio, right? But if you think of like certain trades where you want to have precision as far as what your entry is and your exits, you know, these are some things you want to look at. Anyways, I think it's a pretty good setup for NVIDIA over here. You're having NVIDIA, just look at the technicals real quick. The 200-day moving average is all the way down to $155. And we're still above here, above the 100-day moving average, above the 20-day moving average, but below the 50-day moving average. So we want to see some bullish momentum come back here for NVIDIA in order to bring that Santa Claus rally, that really strong Santa Claus rally back. However, one thing to note, though, is that it isn't what really is getting the love since the lows that we saw last November and October. A lot of love is really going toward the smaller mid-cap stocks. Okay, let's take IWM, for example. This isn't like a full-on indicator of what those small caps are, because this is really comprised a lot of financials, KRE, the regional banks, as well as biotech and so on. But this kind of gives an idea where the leadership is in the market recently. IWM is up 40 basis points today while the rest of the market is flat. And now the S&P 493 is kind of picking up a little bit of speed here, trading near all-time highs. Actually, I would say that, yeah, it's just around the same place. But the RSP was almost at the 200-day moving average recently, right? And you have it here, this monster move up. Of course, the market made a monster move up. But if you ask me in comparison, correlation-wise, RSP, the equal weight, is doing way better than the Magnificent Seven right now. The Magnificent Seven has been propelling these gains upward with concentration of upwards of 44% of the entire market. But you have the S&P 493, which is picking up a lot of speed here. Let's look at the smaller names across the board. Oh, where was that? I just had a brain fart. I definitely just had a brain fart right now. I was like, wait, what am I doing right now? AMKR is making almost new highs every single day. Hood is near its all-time high. Lemonade has been on a crazy move. I would say this is a pretty nice looking bull flag over here. Everyone knows about Path. I'll talk a little bit about Path later. It's some moves that I made in my portfolio later. Iron is coming back. Rubrik is back almost at $100. I mean, I'll be honest. I was buying, and I stopped buying here. And the only reason why I don't really like buying under the 200-day moving average is because we don't really know where this is going to end. I didn't know they're going to be up 30% after the most recent quarter, but I'm certainly glad about it. This is a big part of the portfolio. I wish I added in size below, but I did not. And, you know, you never really know when things are going to happen. So if you're like buying in leverage, buying in calls and everything, you want to have that timing right. And who would have known that this was going to happen? I mean, on hindsight, yeah, oh, look at this. It's closing at a 20-day moving average. It made a 30% move after earnings. But still, I mean, I think that this stock is going to want a breakneck rally again, bringing its valuation back now that the company is already profitable on a free cash flow perspective. And yesterday, I pointed this out on Twitter yesterday. It sold off like 5% after hours yesterday. I don't even know why. I couldn't find any news about it. I thought it was an offering. But that was really put to bed because the stock is actually up 3% today. So we reversed its 5% down after hours yesterday and is now up 3% today. So an 8% move to the upside or peak to or trough to peak move. Still very bullish Rubrik. I think the valuation isn't as cheap as it was back when it was $30 a share when I was buying, or even back recently when it was sub $70 a share, which was just like a week ago. But I still think it's a good value for long term, in my opinion. So again, happy you guys are here. Damn, we got 44 people on my channel. You guys are crazy. Go ahead and check out the Wolf Financial YouTube. That is, again, where I'm exclusively going to be streaming the show, probably starting next year. But my idea is to continue to bring new content to you guys, not just me sitting here in my pseudo office, my kitchen. I'm actually in my kitchen right now. I don't have an office, or I do have an office technically, but I didn't like set up everything, whatever. And the funny story is that I used to be in my office, but the I think the insulation in the room is just terrible. So like during the summer, it gets like 110 degrees in there because I live in beautiful Southern California where it gets 110 degrees, but like that room gets ridiculously hot. And during the winter, it's freezing. So I ordered all of my equipment. I ordered a new desk and everything. I'm going to be moving into the office. Hopefully, that's going to be my New Year's resolution. By 2026, I will be in the new office. I'll be streaming to guys from my office. And hopefully before this summer, I'll get a split air conditioner installed in there. If you guys know anyone that installs air conditioners and stuff in Southern California, please let me know in the comments. Really appreciate it. Oh, appreciate the tip. And going to turn down the mic. Thank you very much. 1 second. All right. Let me know. Oops. Wait, is the mic still loud? Is it loud? Let me do this. 1 sec. Is this loud? Let me know if this is loud. All right, I'll put it back where it was before because I don't want to like blow people's ears off. I'll just leave it here in 37. I know it's weird. Like sometimes my mic is like loud to other people, but it's like not loud. And then I listen to YouTube and I'm just like, wow, it's not even that loud actually. So I don't know what's going on. But anyways, guys, really appreciate the tick up on the viewers here. Yeah, let's really appreciate that tip, man. Honestly, you guys don't have to tip me. While I do appreciate the tip, I just want you guys to really tell me and give me some good feedback as far as like what you want me to talk about, things you want me to focus on. Last Friday, I was actually talking about some football in the last 10 minutes, and then I threw a poll out there asking you want me to talk about football, and no one wanted it. So like, I won't talk about football. I love football. Don't even get me started on the game yesterday with the Eagles versus the Chargers. You know, congratulations, LA, but the real LA team are the Rams, not the Chargers. That's more of a San Diego team. Anyways, I digress. We are already 21 minutes into the stream, and we're not even halfway. So I did want to talk about Skywater. And the reason why I want to talk about Skywater is because this is a company that is more focused on that U.S. onshoring theme, the one that Stock Talk's been talking about, the one that basically the market's been talking about, especially Trump administration's been talking about, is onshoring all of chip fabrication into the U.S. Skywater is more of a small cap play. Kudos to everyone that was buying this around $5 or $6, $7. There's a whole community out there that was buying around $7. They did great. It's actually looking pretty attractive right now, trading above all the moving averages. But I'll get to that in another segment. Happy holidays to everyone. Let's go on to the next segment. I actually touched a little bit on this, the S&P 493, but one person I do like to listen to their research on is Ed Yardeni. He's actually been very spot on in terms of being overweight. Okay, I apologize. American football. I'm sorry. Soccer is football. It's been football for centuries. I was referring to American football. I apologize for my European viewers and my soccer fans. Anyways, Ed Yardeni has put out some amazing research that I've really been using as far as my modeling goes, especially determining where the market might go in the medium to long term. And he's actually quite bullish on the S&P 493, or basically the broadening out of the market. I actually want to play this clip from CNBC. It's somewhat of a long segment. I don't want to play the whole thing, but I want to kind of get into his type of thinking as far as where he thinks 2026 is going to be. And then I will provide my input afterwards. And then after that, we will continue the show with some moves I made on my portfolio recently. I do have some good news to spread about my portfolio that anyways, I'll make that announcement later on. So here is Ed
Yardeni. He's president at Yardeni Research. And we could start by talking about how the markets continue to kind of melt back up. We're near all-time highs. Sure. But I think the most interesting thing, and what has kind of shocked and surprised me this morning, is your move away from the big tech names in terms of being an overweight statement. What happened? For 15 years, you've been overweight on that sector.
Well,
what's changed?
Yeah, and it's worked. And so we've got to the point where information technology and communication services in the S&P 500 now account for 45% of the S&P 500. It's a very concentrated market capitalization. And I think, if the Magnificent Seven are going to continue to succeed, then they're going to have to find sales among the S&P 493. I call them the impressive 493, in order to be used for increasing productivity. And I think that's what's...
Are those stocks overvalued, in your opinion?
Well, I think they are somewhat overvalued for sure, especially now that we're seeing that competition is coming in. It's turning into sort of a Game of Thrones with the Magnificent Seven. At the beginning of Game of Thrones, these things go up and down, and so
So just to touch a little bit on this, he's not bearish the Magnificent Seven. In fact, he's still overweight Magnificent. He's still overweight US. He's still overweight tech stocks. But he seems to think that there's going to be alpha in some other sectors, which he's just about to touch upon. I just want to clear that point because I think there might be a little bit of misconstruement as far as where he is bullish on and where he's not bullish on. So I'll continue it.
The different thrones have various powers. And so I think that's what's happening with the Magnificent Seven. They used to just kind of operate in their own moats and kind of leave each other alone. But I think we're now having a competitive situation. Not only that, but I think we're going to find other startups that come and challenge some of their technologies.
I'm racking my brain. I don't remember everything that happened in Game of Thrones. I do remember the Red Wedding, though. Is that what we're setting up for with the Magnificent? You know, everybody died. You remember?
Yeah. No, I don't think everybody's going to die. I just think I think it's a healthy development. We need to see a broadening of the market, and the impressive 493, I think, are going to benefit from all these technologies.
So instead of betting on these names and thinking that they will continue to perform as they have to this point, you're telling people to invest in what instead? Financials,
industrials, and what's new for me also is healthcare. Healthcare has been kind of left kind of behind, but actually everybody thinks that IT is the biggest contributor to economic growth. It's actually the healthcare industries, especially as the baby boomers get older and rely more on the healthcare industry. So I think healthcare is another way to do it. And then you can also go overseas because the U.S. now accounts for 65% of the market cap of the global MSCI or all-country world. And it's hard to imagine it's going to be much bigger. I mean, it does account for 55% of the earnings share on a global basis. But I think I mean, even this year we found that other countries have done better.
Healthcare being new for you, I mean, that's a pretty big deal, especially when you look at how people are trying to change the inflationary curve of healthcare. In Washington, there's a lot of plans underway. You're confident.
All right, I don't want to get too much into these specific niches, but what I did want to kind of point out was this talk about GDP and the contribution from other sectors, which is really important, right? It can't really all be about tech. Tech obviously is the biggest driver in terms of market gains, 40%, 44% concentration for mega cap alone, which is all tech. What we do need to remember is that these other sectors need to go up for the market to continue going up. The broadening of the market is very important, not only for the stock market, but also for GDP. I actually got this chart over here. Well, I mean, I don't have this chart. This is actually from Visual Capital. But there is this graphic that they had where it's global growth forecast for GDP for 2025. Now, this is the end of 2025. They actually created this outlook for in October. So maybe things change a little bit. But they are expecting GDP in the U.S. to grow for the whole year, not just the quarter, because people see 2% and they think like, oh my God, 2%. Remember, we contracted in the quarter with the tariff situation, then we reaccelerated. But when you kind of even everything out, we're growing at 2%. Multi-trillion-dollar economy growing at 2% is still pretty strong. But if you look at these other countries here that are growing at phenomenal rates, you have Taiwan growing at 3.7%. You have Indonesia, Grab, okay? Their biggest presence is in Indonesia, one of the largest economies that Grab is in. One of the largest economies actually in Southeast Asia is growing at 4.9%, forecast to grow 4.9% this year. Australia is growing at 1.8%, right? So obviously Australia is not a small economy by any means, but it's just showing you like the world is growing, right? If you look at the EU, not really growing as fast. Germany's growing at 20 basis points. Poland, which is actually considered an emerging market, is growing at 3.2%. Let's not underestimate Poland. Sam Mercier has been very bullish on Poland for the last couple of years and still continues to remain bullish. There's actually a few stocks in it that have been doing very well lately. But look at the other countries. Spain, 2.9%. You have Greece at 2%. Like, think of like these smaller countries. Spain isn't necessarily a smaller country, but look at these emerging market countries. Argentina's at 4.5% with Javier Milei becoming the new president in Argentina and basically like growing that entire nation. Brazil, 2.4%. Brazil is one of the largest economies in South America or in Latin America. And this is where my bull case for Mercado Libre comes in. Why I'm still bullish on Mercado Libre, the Amazon of Latin America, because you have these other nations around the entire world growing at pretty phenomenal rates. Maybe they're not a multi-trillion-dollar economy like the US is, but they're still growing pretty considerably. That provides pretty good setup for these stocks going to the next couple of years. And it's not just in the US, it could be abroad, which is what Ed Yardini was saying. Emerging markets assets could be pretty attractive for the next few years. So I think the next few years might be pretty good. I don't know if it's going to be as good as it has been for the last 3 years, right? So if we technically close the S&P 500, let me actually pull up Google Finance here real quick. So if I pull up the S&P 500 here, I look at the year to date, we are up 16% year to date. Guys, we had a 25% rally in 2024. We had a 25% rally about in 2023. 16% is a lot. So let me actually do a little bit of math here. All right, so if we start at 1,000, all right, and then we add 1.25%, and then we do another 1.25%, and then we multiply that by 1.1, let's just say we end around here, 1.7, that means the S&P 500 is up almost 80% in the last 3 years. Like a multi-trillion-dollar market is up 80%, right? Like just, it does not have to go up another 20% next year. It would be cool if it did, but it does not have to go up 20%. In fact, I would say that a lot of the position that I have in my portfolio is not mostly in mega cap. Like obviously for the appreciation, you have Amazon, which is a large part of the portfolio, a mega cap. Of course, that's going to be sitting there, but the rest of my portfolio is mostly in small and mid caps. And I think that when you have the Fed cutting rates, you have IWM basically showing strength toward the end of the year, you have Bitcoin coming back, it might be a broadening out of the rally for the next couple of years. And if that does happen, the market doesn't have to go up a lot. The market can be up 3-4%, which isn't a lot to ask for, but IWM could be at 300. I'm not saying it's go to 300. In fact, I'm not even long IWM. I'm only long companies that are profitable, that have a strong moat, that are part of that US onshoring theme, and especially companies that are pretty cheap today. You know, these are companies I've been talking about for a while. You had On Semiconductor, which has bounced pretty considerably from its lows. You have ZETA, which is, I would say, still pretty cheap from a long-term perspective. You have Path, which is up like 30-40% from its most recent earnings, but I would still say it's still of good value. I think that these other stocks that are out there are the ones that I would be looking at, not looking at Amazon, NVIDIA, whatever. Like maybe those provide short-term trading opportunities, but if you want like really strong returns, if I want really strong returns, because I can't tell you guys what you want, I can say what I want. I'm not going to be looking at the mega caps. I'm going to be looking at the smaller and mid caps, and those provide really good opportunities, and some of them are still pretty attractive today. So we will see what is going to happen with those. Really appreciate you guys being here, all 62 of you, 12 of you on the YouTube financial channel. What do I think about Zscaler? Let's actually take a look at Zscaler because they had earnings recently. And I mean, the earnings were good, but yeah, it's like down from its most recent earnings. Where's my trading view? All right, so we have BM&R here. Damn, BM&R is up 10% today. You guys are wild, man. Like, friggin' diamond hands, guys. Like, diamond hands. Congratulations. This was at 24 bucks just a few weeks ago. How much is it up from there? From like the bottom. Oh my goodness. 62% move. Diamond hands, guys. Kudos. I have to hand it. Anyone who's still holding it from those lows, congratulations. Like that is some serious conviction and should not be played down. That is some serious conviction. Congratulations. Where's BM&R going to go? I kind of want to see what this is looking like, the chart. So we're above the 200-day moving average. Good. This is a very important place to defend on here. We're going to get into Zscaler in a second, but this is a very important spot to defend here, and it did defend it, and we have actually bounced pretty considerably. It could be heading toward the 50-day moving average at 43 bucks, and then the 100-day moving is at 45. More importantly, this is going to be following Ethereum, right? This is probably what stopped it from going today, the 50-day moving average. Moving averages and a little bit of witchery and whatever it is. Like, I think this stuff matters in the short term, right? Long-term perspective, who cares about moving averages? Ethereum just keeps going up over the long term, right? It just keeps, maybe it doesn't keep going up over the long term, but Bitcoin keeps going up in the long term. But in the short term, I believe that technicals really do matter in the short term, especially when you have Ethereum, which doesn't report earnings. It doesn't provide numbers. You can't see who is really buying Ethereum as far as institutional goes, other than whatever you see in the crypto wallets, whatever you see in the news press releases. It looks like it wants to go higher. The question is, how high is it going to go before the end of the year? Tom Lee said it was 5,000. You can't dismiss it. If this thing goes to 5,000? Are you going to be surprised? Like, I mean, you could have these crazy moves in Ethereum. Like, it was at 2,500. It basically made a 50% move. Actually, that's not 50%. Probably like a 25-30% move in the matter of a couple of weeks. I mean, this thing has legs, right? This thing has legs, but we need Bitcoin to participate. We really need Bitcoin to participate over here, and we also need Ethereum to continue participating and get back above that 200-day moving average at 3,500, which isn't a lot to ask for. $150 move on Ethereum is not a lot to ask for, but we do have FOMC tomorrow, and you guys already know where's my CME group over here? All right, so we have a 87% chance of getting a rate cut. I don't know what these people over here are doing, the 12% of getting no rate cut. Get out of here, guys. But anyways, guys, it is going to be a rate cut tomorrow. Powell does not like to surprise people. I mean, who knows? Maybe he might surprise people with a limit down market on Thursday. We'll see, but I doubt it. Powell does not like to do that, especially with Kevin Hassett coming in as a new Fed chair, very likely to come in as a new Fed chair. We'll see what happens with that one. But let's get back into Zscaler for a minute over here because my boy asked me about it. This chart looks pretty nasty. I still remember when Zscaler was down here. This is what Zscaler does. It loves to do this. It loves to do this, okay? And the reason why I say this is because software stocks are very vulnerable to institutional manipulation. And not just institutions like JP Morgan, whatever, but like trading institutions, right? And they love to have massive swings in the stock. Now, what was Zscaler's earnings last quarter? So Zscaler actually beat top and bottom. They beat top by about 12%. My thing about Zscaler is that while I'm calling Gartner, network security, quadrants. No, that's not the one I want to look at. So there is a magic quadrant for Zscaler. I think this is the one. Yeah, this is probably the one. So let me open this up in a new window over here. Okay, so we have Zscaler as like one of the top performers and leaders when it comes to security service edge. Now, security service edge is more of like network security, right? This isn't like client management security, which is like where CrowdStrike Sentinel-1 comes in. Someone asked about Sentinel-1s. But this is more like the network security side. And Zscaler is a cloud data platform that offers network security, and so is Palo Alto, but Palo Alto is more of a giant. Zscaler is a leader, and this is the reason why I don't think we're going to see new all-time highs until they're actually able to hit it. So Zscaler reported earnings recently, and one thing you got to remember with these software companies that not a lot of them are profitable. And Zscaler is one that's not profitable. In fact, I believe last quarter they still are not profitable. And it isn't like super important, but to like reach those really high premium valuations, you need to show profitability. Let's actually take a look to see how far Zscaler is coming toward profitability here. I mean, the growth is pretty tremendous. They're growing at about 26% year over year for the quarter, 23% on the yearly basis. Annual recurring revenue is growing at 26%, RPO is 35%. So again, RPOs, that remaining performance obligations, are backlog for their products. You have annual recurring revenue, which is predictable recurring revenue that's coming in from customers who are subscribed to their services. You have ARR for customers over 100K growing 18% CAGR. 1 million, which is much more important than the 100K, which means that they're cross-selling to their customers, is growing at 22%. they're not going to post it here. Very likely they're not going to post it here. They post their non-GAAP gross margins, and they're going to have non-GAAP because their SBC is pretty high. Jay Chandri, who's the CEO of the company, the Chandri family owns the majority of the company. They actually own a lot of the company, and he keeps paying himself hand over fist. And that's where a lot of the SBC is coming from, in my opinion. If I open up the fiscal AI over here and I bring it up for Zscaler, let's take a look at that SBC. Whoops, cash flow statements. SBC is over here. Let's look at it on a quarterly basis. All right, here we go. So SBC, stock-based compensation, is reaccelerating, right? So the market doesn't want to see that. SBC, or stock-based compensation, grew at 20% last quarter. Revenue grew at 26% last quarter. Let's take a look at, I'm going to hide that. I'm going to hide that beast right there. Let's take a look at some ratios here. SBC as a percentage of revenue, which is much more important than the growth itself. It kind of gives you a projection on how fast you're getting diluted versus how much the revenue is actually going up. I believe it's on the common size. Yeah, at stock-based compensation to revenue. Come on, fiscal AI. All right, so it didn't load up. Hold on. Wow. When you have 79 people waiting for you to open up a chart, it feels like it's forever. Is SoFi dumping? Oh, wow. Something happened? Good gravy. I mean, I don't know. Like, you don't get added to SP 500, so the market hates you. It's a ridiculous story. All right, so it still hasn't opened up. All right, here we go. So we have stock-based compensation as percentage of revenue. They made their low in stock-based compensation as a percentage of revenue back here in April of 2024. Let's open up the Zscaler chart, and I could bet you that was when the stock was near its all-time highs, or maybe made its bottom. Could be one or the other. April of 2024. Oh, that was when it made its bottom. Interesting. Okay, so maybe it didn't. Actually, April of 2024 was when they reported it, actually. Okay, so this is when yeah, you know what? That actually makes a lot of sense. So when they reported their earnings and they showed that stock-based compensation basically bottomed around that time, the stock jumped up heavily after earnings. And we're actually trading lower than we were a year ago. The market's looking at this SBC as a percentage of revenue. This is another one of those software companies where you need to get SBC under control, especially when your CEO is taking a large chunk of that. And yeah, I mean, I think that's a story here. I don't think there's anything wrong with the company. It's obviously a leader, according to Gartner. They need to become profitable, but I mean, from a free cash flow perspective, they are positive in free cash flow. But look, guys, they need to stop paying themselves as much. Jay Chandri needs to stop being greedy here. He needs to take less of a salary from stock-based compensation. He needs to stop hiring and paying people insanely, which is unfortunate because you need to be competitive in the software industry. But if you really want to make that mark, you need to keep stock-based compensation under control. That, I think, is a story with Zscaler. I don't think there's anything wrong with the product. I think it's a great product. I think maybe they're trading a little bit of expensive coming to earnings. I mean, look at this chart. They were trading like in the $300 range coming to the earnings. And yes, they were trading lower before the earnings, but still, like, this was pretty wild seeing it up here all the way from 150 bucks. You just got to be patient with this one. Would I buy the dip hard? It still is a pretty expensive company, even after this massive drop. If I were to buy a cybersecurity company for a long term, I'd probably just buy Palo Alto and just call it a day. They recently acquired CyberArk, which is identity access management. So mostly an identity when it comes to cybersecurity. That'll probably be a more favorable thing to own for the long term. But I'm going to be bullish Rubrik, even though that's not necessarily in the same sector. Rubrik is the leader in data security. I think they're going to continue to being the leader. They're not profitable from that perspective, but I think their valuation speaks for itself to not give them that premium because they're not profitable yet. But they will be profitable in the next couple of years. So look forward to that one. Also didn't understand the fall on Sentinel-1 after the earnings. Well, I mean, you got to kind of understand the reason why, okay? They're trading at multi-year lows over here. And the reason why, and I used to own this company back then, sold it around like 24 bucks. And I can't get into this because their growth is slowing down. Their margins are contracting. They're not the leader in cybersecurity. They are a secondary leader in cybersecurity, but they're not the leader. And I mean, yeah, a company is cheap, but it's probably cheap for a reason. I would stay away. I would stay away from a company like this unless like you really believe in the story. Like for me, I'm staying away from this company because the chart looks terrible, but also the fundamentals. I mean, from a quarterly perspective, the revenue is growing at 23%. They used to be growing at 33% plus, but now they're growing at 23%. They're not even profitable. So they're slowing down the growth. And on top of that, their margins are contracting. That's why the market doesn't like them. You know, and the funny thing is that Confluent kind of had like a similar situation because Confluent was decelerating. Their margins weren't so great. But this is when it starts to become an acquisition candidate, when the valuation is trading very cheap. And then you have big dogs like IBM looking at these companies. It's like, hey, look, we can't build our own product in this ecosystem. So let's go ahead and acquire someone. So now what company might acquire Sentinel-1? Well, you have a few companies out there that might acquire them. You have Microsoft could acquire them. They already have their own cybersecurity product, but if they could basically whip out the competition by just paying a couple $1 billion, that could be fine, but I don't think they really need to worry about them. So Microsoft could acquire them. I don't know if they will. Google might acquire them, but I doubt it since they just recently acquired Wiz. Actually, I don't think they acquired Wiz. I think that got blocked. Or maybe they did acquire. I forgot what happened with that one. IBM could acquire them. Cisco could acquire them. Cisco is starting to get back to the software game. Their cybersecurity segment is doing good, but it's mostly from a hardware perspective. They do offer a software cybersecurity product, but if they do take this on, will the Cisco shareholders like that? We'll see about that one. So, anyways, those are my thoughts on Sentinel-1. I can't buy it. I can't buy Sentinel-1. So, like, what's the deal? What is happening with SoFi? What is happening with SoFi here? Do we have anything on the wire? What's going on CNBC? We have Oracle earnings tomorrow. Do we have anything over here? No one's talking about SoFi. No one's talking about SoFi. Oh, wow. They're talking about Oracle debt. We'll get a little bit on that one tomorrow. I'm actually planning on doing the Oracle earnings and Adobe earnings tomorrow. That one's going to be very exciting to follow. Also, Synopsys does earnings tomorrow. But again, you know, all 83 of you reporting in here, 75 people on my channel. Please go head over to the Wolf Financial channel that I just put over there on the comment below. That's where I'll be exclusively streaming probably at the next couple of weeks, probably into the new year. Going to start streaming exclusively in there. Don't want to lose you guys. Want to bring you guys this content. And again, I'm here for you guys. If you want me to start talking about something, go ahead and shout it out in the chat. I will talk about it. I will get into it as long as we don't have a jam-packed schedule. Opinions on Nebius. Bullish in Nebius. I mean, how can I not be bullish in Nebius? I mean, the chart could be better, right? But I don't think you guys were buying over here, but you're probably buying down here, which is better than buying up here. And it's certainly not as good as buying over here, but we can't go back in time and buy it. We can only look forward to what's happening today. There is another company that is starting to make a comeback here, and that is Iron. I'm actually very surprised that this company has bounced pretty considerably for its low, but the chart still needs a lot of work. Needs to close above here, above the 20-day moving average. I can't seem to close above the 20-day moving average. But anyways, this is all really, yeah, no, that's the Wolf channel. This is all really in the data center realm, right? So if you don't have NVIDIA coming back, I think the going bull case for these data center companies, it's not just Nebius, it's not just Iran, it's also Applied Digital, Bitfarm, Cypher, Cores, all this stuff. You need to have the spending continue. But not only that, but there needs to be like a positive momentum in this entire thesis. And I think right now the market's like just chilling right now. I did not leave for dead, man. I'm still in IREN. I just wasn't buying hard, right? So IREN, I will buy, or I will look to buy when it's above $55. Until then, like we don't know when it's going to come back. Do you know when? I don't know what's going to come back. Could have said the same thing for Rubrik, but man, the thing was up 30% after the earnings, right? And then I actually added during the dip yesterday around $86. But it's like, it's just, that's how I work. I used to be like massive buyers on all dips, whatever, but like that just, it hasn't worked out for me in the past, and I don't want to do it anymore. I want to keep the alpha in the portfolio. And right now, IREN is about 2% of portfolio now. It was 3.5% when I was up here, but I bought it down here, right? So it went up here and then came back. Yeah, I traded a little bit in and out of it over here, but I ultimately bought back the position at around $60. So yeah, I'm down on my recent re-out of the portfolio, but I still, it is still from the same position I had back here. So having a lower cost basis is pretty important in this case. Stock Talk talks about ad nauseum on stocks and spaces, which I'm going to jump onto after this. But it's important to have that low cost basis, because then you can just look at it, well, I'm still up over 2 times on my position. So it's like whatever, and it's small positions, it's whatever, right? Like, you know, it's a little bit tough to say with Nebius over here. Yeah, I'm still bullish Nebius for the long-term perspective, but I'm not buying here. I added a little bit over here, but like the big position was built down here. And you could have even built it here and here and here. But after that Microsoft deal, that's when the market started noticing it, right? So it's like, do you want to buy these things after the market recognizes it and after the market gives it this premium, or do you want to buy it beforehand? You know, there's a few other companies, and I'll talk about in the last segment. We're going to get a little bit into some moves I made in the portfolio recently. Was that I actually sold my position in ServiceNow. All right. And I'm bullish software. I'm bullish ServiceNow. It's just, this chart has gone nowhere ever since breaking the 200-day moving. This is why moving averages matter, right? It's gone nowhere since then. In fact, it just looks like such a bad chart. And I added to Path. Okay, not in size. I just added a little bit to it. I built my entire position here around $14. I added to no, I'm sorry, I added to ZETA today, which I think is still a good deal. And I was buying down here in the 17s, and I added to AMKR, and I already built my position in on semiconductor, but like I would rather buy these stocks before they have like this huge premium in size, right? So I don't mind adding to certain positions after they made a move. Like I bought Rubrik yesterday. It's like, oh, why didn't you buy Rubrik when it was below? It's like, well, I didn't know it was going to do this, right? The chart didn't look constructive, so I don't want to buy it, and I don't mind adding a little bit to it. But like, I would rather build a position in size when the price is depressed, not when everyone's balls to the wall bullshit about something. So, I mean, those are kind of my thoughts. That, I mean, you bring up A-Lab. I don't think the story is over. I just think that it made a massive move from here, right? It made a massive move, and it went all the way up to $260. So, do you still believe in the company? I mean, the chart doesn't look that bad, right? It's above the 20-day moving average, above the 50-day, but the 20 days below the 50-day, and now the 100 days above the 50-day and the 20-day. So this can go back down to $127, right? So, you know, you got to kind of think about things when you're constructing a portfolio. You know, the size you want to put in certain positions, how big you want to make it, how much you want to buy, when you want to buy, how much you want to lever up. Like, these are decisions you really got to make when you're constructing your portfolio. And one thing coming into 2025 was that I had too many positions, and I've been trimming positions and cutting positions all year because I really want to get it down to maybe like 10, maybe even less. And I'll actually start sharing that with you guys later on, not right now, but I'm planning on starting to share my portfolio publicly at some point. Not necessarily the moves I'm actually making, mostly because like I do make considerable amount of moves, so it'd be too much to keep everyone track of. But like, I'll start sharing my portfolio and showing you guys, being a little bit more, being more transparent in what I'm thinking, what I have in my portfolio and when I'm selling, when I'm going to sell, whatever. Like, I'm going to start being more transparent with that, because I think there's just more value to provide when you're more public about what you're doing. And I used to have behind a paywall, and I'm not planning. I'm planning on decommissioning that, and I'm planning on going public with a lot of stuff. So, looking forward to start doing that next year. I need to put everything together before the end of the year so that way I can start doing that for next year. But again, coming into 2025, I had so many positions, and I've cut so many. And some of them I cut actually at the right time, some of them at the worst time, right? Like I sold Google at $165, and I bought Meta around where it is right now, and that was the worst mistake I could have possibly made. But we live with our mistakes, right? Like, and then on the other side, I bought stuff before when it was down, and I sold it when it was all the way up. Like I bought CrowdStrike when it was sub $200, and I sold it when it was around here, right? So that just comes with like, where do I expect the company to go in the long term? Where is the alpha in it? Like I am gearing my portfolio more toward consistent outperformance and reducing maximum drawdown. And a lot of that really goes with hodling stuff, right? If you want to hodl your portfolio, you're basically long the market 100% all the time. You're buying and holding. That's a completely different game. For me, I don't want to be in that game anymore. I want to reduce the amount of drawdown in my portfolio, and I want my portfolio to go up every single year, and I want to produce triple-digit returns. This year, I would say the first half of the year was terrible. I think I was down like 20-25% at the bottom of April. It was pretty nasty because I was up like 22% in the beginning of the year in February, and then going down like basically a 50% peak to trough move. But the whole market felt it. The market was down like 23% intraday. So like, it is what it is. And then now I'm up almost 100% in the year. And the last couple of weeks have been very high contributing to it because I changed my strategy. My strategy used to be a lot of like, buy the dip, buy the dip, and keep buying stocks where the charts look terrible and whatever. And that I was buying. I remember back, I kept on buying the dip on stocks where the chart was below 200-day moving averages and whatever. I was like buying all the time, trying to call the bottoms last April. And like, even though, I came back from April, I would have done a lot better if I was a little bit more constructive and actually didn't buy in April and just waited for that confirmation to buy. And what I did recently that really helped propel the return since the beginning of October was that I didn't really buy dips too hard. I was more selective with what I was buying, and I bought it in size. Like on semiconductor was a crazy move that it made from the lows just a couple of weeks ago. And hey, maybe I was lucky, maybe I wasn't, but the stock was very cheap when it was down here, and it is still pretty cheap today, in my opinion. And then you had ZETA, and then you had AMKR and a hood and a lot of stuff. Like, look, guys, when that inevitable downturn comes, I want to be ready for it, and I only want to have what I want to hold in that downturn, right? If the market is down 20%, I want to make sure everything that I have is what I want to hold, and I want to have it in size, right? And I want to make sure that if I have cash portfolio, I don't want to deploy too quickly or preemptively because I think this is the moment to buy. So my goal is to get the portfolio below 10 positions, 10 positions or below. And we'll see what happens next year. I'm not trying to shoot for the trees anymore. I think the easy money's been made in the market. I think trying to really press it toward the end of the year is going to be a little bit difficult, in my opinion. It's been a great year. I don't want to press it too hard. I'm like sitting at about 5% cash-ish about right now. And I got a couple of swing positions out right now in Amazon and NVIDIA. But I'm ready to cut those in case we get a pullback. Tomorrow is going to be a make or break situation with the Fed. I mean, we know the Fed is going to cut 25 basis points. But the question is it going to be a hawkish cut or a dovish cut? Ed Yardeni seems to think it's going to be a hawkish cut. I don't know. I think a lot of people are expecting a hawkish cut at this point. I don't think it's going to be like an extremely dovish cut, but we need to get a Santa Claus rally. And to get a Santa Claus rally, I don't think tomorrow is going to be the day that it determines if we get a Santa Claus rally or not. I think that the real move after the Fed happens the days after, not the day of the FOMC announcements. Tomorrow, expect up and down swings. Just expect it. For me, I don't think we're going to get a massive Santa Claus rally in SP 500. I think that's going to happen with the S&P 493. So we will see, guys. We will see. Am I buying Aqua? I actually do a little bit of both, but I'm leaning more toward shares for the majority of the portfolio just to reduce the drawdown. But I like to add the options to amplify that growth. Anyways, guys, I'm going to jump onto the stocks and spaces. Appreciate you guys tuning in. Again, Wolf Financial is where I'll be exclusively doing these streams 4 days a week starting next year. I'm going to be doing it on my channel concurrently. And tomorrow, going to be streaming the Oracle and Adobe earnings. That's going to be a very interesting one to see. But again, go ahead and subscribe to that channel. That is where everyone should be, because starting next year, I will not be using my channel anymore for these streams. All right. Appreciate you guys. Thank you for tuning in. I see a lot of the OGs in here as well. June, Ray J, or Ray, R-E-Y, but I have to call you Ray J, my boy. Girl, I don't know. I take it back. Anyways, Ricardo, thank you for joining. Everyone, thanks for the tip, homie. Oh, yo, this guy's been showing up a lot. Appreciate you joining over here.